Hey everyone, good afternoon. It is Tuesday, it's the 30th, it's about 2 o'clock. We just got done kind of reviewing all of the trade information and a lot of volatility today, as expected after the long weekend. Really big picture, what happened is the dryness didn't get completely cured, but it also didn't get any worse. And in fact, in the extended forecast, a lot of cooler weather and moisture got brought in into pollination and kind of for the rest of the summer. So we'll see if that materializes, and it could go either way, right? If it gets hotter and drier, we're going to have higher prices. If we have kind of normal weather, then we're going to have lower prices. And the backdrop behind demand and just kind of overall sentiment around commodities is bearish. So any type of rain or any type of good weather will more than likely be sold, in our opinion, just because the sentiment is so bearish. So here's the weekly chart of corn that I've got in front of you, and let's keep things really simple with how we're viewing this. Okay, from the high of last October down to where we are today, you can see that we're below this base channel. You can also see that we've fallen below these lows right here and below these lows. So from our view, it's really simple. Anything below 550 is bearish. Anything up above that is probably something that we want to look at reowning and being in a position to capture higher prices. Because let's face it, like we talked last week, if we're going to have higher prices because we're going to shrink the carryout, then we need to blow through these upper levels and not dally around. So I think it's prudent to stay completely hedged and just look lower from here. And anything below that, we want to stay hedged. So what we did today is on any remaining new crop bushels, we bought $5 puts, which are down here, and we sold 550 calls. Very simple. If we move up, then we'll capture that move. Great. And then we'll look at what to do up above that. And that's just in addition to the other sales that we've had on from kind of up in these levels up here. So we're just going to continue to sell this market until it proves to us that it needs to be bought, and that's not the best course of action. And if it does happen, then it does. Great. Higher prices aren't going to hurt anybody. We're just going to trade with it and let it come to us. All right, now let's look at the shorter term picture. Here's your daily chart. This is what we looked at on Friday, and today we had a big sell-off, right? We almost got a bearish engulfing day, but it found a little support right at the bottom. But again, here's our 550 level. Anything below this level and below this daily cloud needs to be sold. It's really no more complicated than that. No different than we looked at Friday. I think we just got to sit here and hold hedges. All right, now let's look at beans. Let's look at old crop first and then new crop. Beans had a horrific day today. Absolutely sliced through all of this bearish or support that was sitting here down at $13. Just sliced right through it. We have a decisive close below it. I think it'll challenge it once again. Otherwise, I think this market's going to go lower. Our first target is down at the 1240 level. So we're sellers of soybeans, even though we're down, even though we're deep into a sell-off. That doesn't mean it can't go lower. So when you're in a trend, the trend is your friend. Keep trading in its direction until you have a clear and convincing reason to do otherwise. And here we just don't have that reason at all. We came out of the base channel, we tested it, we fell away from it today and broke new lows. New crop was even worse. On Friday we had a little bit of bullish engulfing action here, and we ended up just crushing it today. So I think 1130 and then a test of 11 is probably more than likely in play because the weather for soybeans is really good, and I just don't see any reason to think otherwise on this chart. And again, I hate to be a seller near the bottom of a big trend, but I don't think it's done, and you got to just keep going with that trend because you don't know how far it can go, and you'd much rather make it take you back out up here above 12 bucks than anything else. All right, I already showed you old crop, that's new crop, and just kind of like corn, we just don't expect corn to hold up with this kind of selling pressure in beans. And in wheat, wheat had a really bad day, right? We were a little bit worried about this last week off after failing to hold all these highs and the sell-off and steepness that we had. It just accelerated lower. It got the $8 level, which is all of this support. And now that we've broken back through it, right? I'm a little bit worried that we couldn't accelerate wheat lower again, and come challenge the 730 level and even lower, just based off of the strength behind this overall move. So if we put a Fibonacci extension or retracement levels on here, you can get some targets. Those targets are down at 667, 624, and below that, $5 a bushel on Kansas City wheat. So we are bearish wheat. There's no other way for us to look at it. And it's going to take something really bullish to stop it. I mean, think about the bullish fundamentals that this market has endured. It is massive abandonment, massive drought, small yield for those acres that are going to make it. Demand is decent. War in Ukraine. You just have all these bullish fundamentals, and the market just doesn't care. Every time it tries to rally, it gets smacked in the head and just falls. It just falls back to the bottom of its range. So I think wheat's got to go seek lower levels in Kansas City in order to stimulate demand or start discouraging production, one of the two. So I wouldn't be shy at all about continuing to hedge. And again, like corn, if we're dead wrong and we blow back out the top of this thing, great. Higher prices don't hurt anybody, and we can manage that from there. But I think lower is where we have to look across the board in all these markets for the foreseeable future, or at least until the weather changes and forces us back up. All right, that's what I've got for you. Remember, there's risk in futures and options, and you should only trade those in light of your own financial condition, and it is not suitable for everybody. If you have questions, please call us. We're happy to talk to you, walk through positions, help get you positioned to where you're comfortable and where you feel like your best risk is managed. Have a great night. We'll talk to you later.